This is Brian Stoll for Timing Strategies, October 5th, 2007. Looking forward to the week of October 8th through October 13th, 2007. Never mind about what happened. You get sick enough of that reading it, everybody reviewing the same thing. Look at what's more than likely to happen for the coming week and how to respond to it going forward. As you see, everybody, the S&P, using the SPY as a surrogate, Spiders has made a new all-time high with a new all-time closing high. And that's about as giddy and bullish and fervently gleeful that I've heard the media and the financial press since I can remember, over the last 2 years at least. So what do we have here? Obviously, we've got the gap sitting underneath us from yesterday's low and Thursday's high. Breaking into a new all-time high at that level doesn't, in my opinion, reinforce the idea of too much further follow through to the upside. I am anticipating at least a closing of that gap back down to about the 154.38 level or the 150.55 level on the S&P cash. If you trade the minis, just do the math on that. For those of the idiot wave persuasion, no negative reference to Elliott Wave or Fibonacci fans, because they do have their redeeming value, but I think they've been greatly diminished over the course of the last 3-4 years with everybody trying to tell you where the 1618 is at. Well, ironically enough, on a time price basis, we'll leave the price element out of it for now. We do have actually a time segment count from the low of March the 13th, I believe it is at this level, to our high that we previously put in back in July the 16th or 24th, to where we are now. We do have a 1618 price extension at a new all-time high. Does that mean anything? Probably not. On a significant level, yeah. Does it have any impact as far as giving some help to have a pullback? I would think so. Everybody's looking for the pullback, so we might not even get that. But if we do get the pullback, where I'm looking for is obviously somewhere down into these levels where the green lines come in from where we had the Federal Reserve meeting low of September the 17th all the way to our high. Yeah, there are some thresholds down there at about the 152 level. The 21-day exponential moving average is maintained its integrity as far as a trend, going up all the way back into, as far back as since Hank Paulson got control of the Treasury. But so the anticipation is that we should see a pullback at least to that gap low closing. And if we get a real panic sell-off, which would be real healthy for the market, we should see it come back down to at least that 21-day average. And if it really wants to confuse people, taking out that pivot low would put us right in here at the 55-bar average. So somewhere back to this trend line would put us right in between 55 and the 21-day average. I'd really like to see that. I'm sure everybody else and all the squeezed and trapped shorts would also like to see that. So with that in mind, the probabilities are that we won't see it, and we'll probably sit here and congest and consolidate somewhere around this level, at least closing that gap down to about there at the 154.55 level for the next week. I also anticipate eventually that we will come back down even further to test this trend threshold, but who knows, that could be months and months away from now, and what the market does between now and then, if that ever does happen, remains to be seen. So we don't want to try to shoot an arrow too far out into the future. So really, how to manage this, I don't want to get too confusing with too much information on the chart, but obviously this trend line is the significant one where we've broken it several times. I've got several time counts here: 1, 2, 3, 4, 5, 6, 7, 8, 9 times a charm pop through. So again, this being the main trend line, somewhere back in this level. If we should get that on a panic sell-off because of first of the quarter buying contributions into IRAs and qualified pension plans and so forth, then the most obvious place is going to be somewhere back down to this level. But anticipation-wise, I look to just see this gap get closed for now. Once we close that gap, then it's a whole nother story. If we don't close that gap by next week, meaning if we sit around above this threshold, above that line, above the lows of yesterday on Friday, for the next 2 or 3 days, my estimation is that all bets are off, that it's just going to keep going and going and going, and Energizer bunny its way into more euphoria. If you look at the website, some of the references to our dollar index, which is what really is fueling this market, it's got very little to do with the fundamentals. In fact, fundamentals, if you ask me, mean less and less and less. In fact, they probably mean nothing almost at this point. Technicals mean almost probably just as little, because what you do have is a very, very involved Federal Reserve and very involved Treasury Department supporting a market going into an election, going into the end of the year. Plus, once you get the fevered pitch of what the public and the financial press has been putting into what you would say fire onto the gasoline onto the fire into this market, that being a sentiment matter, yes, sentiment is extremely overstretched, but still the amount of intervention or the amount of involvement that the Fed and the Treasury are putting into this market, in my opinion, is going to support this level, with maybe this gap getting closed. But we'll see what happens next week. So next week's the big one, to see what happens after the first Monday or Tuesday, and from there we'll have an update to kind of let you know and what we see next.